Most people treat investment like an ultimate goal they will one day reach. They never invest because they think it takes a lot of money to start. But here's the truth. Your weekly takeout money, your Starbucks money, or even your lottery ticket can be your stepping stone to financial freedom, not overnight. But with just $12 weekly into these 3 ETFs, you can start your investment journey, and by December, you will be well over $1,000. Stay consistent for a decade, that small habit could turn into over $15,000 with dividends doing most of the work. We're wired to think small amounts don't matter, so we wait for more income, for more time, for the right moment, but time is the one thing you don't get back in investing. And here's what most people miss. It's not about how much you invest, it's about how consistently you do it. Let's dive into our first powerhouse ETF. ETF number 1, SCHD, the Schwab US Dividend Equity ETF. This ETF is built on reliable giants. Think Pepsi, Home Depot, Coca-Cola. It pays you dividends and grows over time. SCHD currently boasts a dividend yield of approximately 3.9%. This means for every $100 you have invested, it aims to pay you roughly $3.90 per year, distributed quarterly. Those payouts get reinvested, buying you more shares, which then earn even more dividends. That's the start of compounding. Now watch what happens. If you invest just $12 a week into SCHD from June to December, you'll have about $336 invested. With average dividend reinvestment and 3 to 5% price appreciation, that number moves to roughly $355 to $360. That's not explosive, but it's momentum you didn't have before. It gets even better with the next ETF, JEPI, JP Morgan's Equity Premium Income ETF. JEPI is a favorite for income-focused investors because it's designed to give you high monthly income. It works by combining a portfolio of US large-cap stocks and uses a smart strategy called covered calls. Basically, it earns extra cash by renting out the stocks it owns. That bonus income gets paid to you monthly. JEPI currently offers an impressive dividend yield of approximately 8.3%. That translates to significant monthly cash flow that can be immediately reinvested, accelerating your portfolio's growth. Put another $12 a week into JEPI, by December you're up to $355 to $365 again. More importantly, you'll have seen monthly payouts land in your account while you sleep. Last on the list, JEPQ, JP Morgan Nasdaq Equity Premium Income ETF, a tech-heavy income ETF. It's got exposure to names like Apple and Microsoft, and it uses options to hand you regular dividends. JEPQ is similar to JEPI, but with a focus on the tech-heavy Nasdaq 100. JEPQ currently leads with a dividend yield of approximately 11.6%. Its monthly distributions are the highest among our trio, providing powerful fuel for reinvestment and rapid compounding. $12 a week into JEPQ, you'll hit another $355, $365 by December. So, when you combine the power of these 3 ETFs, $12 into SCHD, $12 into JEPI, and $12 into JEPQ, that's a total commitment of just $36 per week. By consistently investing this $36 every single week from today, mid-June, until December 31st, your total personal contributions alone will reach a remarkable $1,008. You're already there just with your discipline, but it gets even better. When you factor in all those dividends from JEPI and JEPQ hitting monthly, and SCHD paying quarterly, all automatically reinvested, along with any modest market appreciation, your total portfolio could realistically grow to over $1,050, potentially even $1,070 plus by December. Now you might be thinking, all that effort, just $65 gain? Doesn't sound life-changing, but that's where most people miss the big picture. This isn't about 7 months. This is about building the habit that feeds you for 7 years or 17. Let me show you the real magic. If you had invested just $1,000 into SCHD in 2011 and reinvested dividends, you'd now have over $4,600. That's over 4 times your money, without needing to pick the next big stock or time the market. Now imagine this. You don't stop in December. You keep putting away your $12 into each ETF week after week, month after month. Suddenly, you're not just building a $1,000 win, you're building a retirement machine, and all it took was the decision to stop underestimating small amounts. And if you just repeat this, $36 hour a week in 2026, 2027, and beyond, the compounding only gets faster. You're buying income for your future self. As always, remember that investing involves risk, and past performance is not indicative of future results. ETF values can fluctuate with market conditions. You don't need to hustle harder. You need your money to work smarter. If you're serious about turning small habits into real investing strategies, hit subscribe. No hype, no fluff, just one small step at a time. And if you've got $12 this week, you're already ahead.